Testing, making sure that this is on, which it is. Perfect. And just want to make sure that the stream shows we are running, which we are. Okay, and I can hear myself. Perfect. All right. Just going to go over why I am looking at shorts on the Aussie, Kiwi, sorry, the Aussie yen and the Kiwi yen. I'll start off with the Kiwi. So, in these Pythagorean channels, we have price coming up right against one of those channels, which is and it's in a very extended condition. In fact, if you want to measure, go to the weekly here. We're getting into some pretty important GAN ranges here. And so from our COVID crash low in March 2020 to where we are now, 343 calendar days or 49 weeks. Now, the number 49 is an important number in GAN analysis. GAN wrote that, in the cycles of the inner year, the number 49 is the death cycle. And this isn't just for days, this is for bars. So the bars either, on an hourly chart, 5-minute chart, daily, weekly, monthly, 3-month, whatever, yearly. 49 is a time to pay attention to in a cycle. This is especially true if, in the trend preceding that 49th week, if it's a very strong trend, expect a very violent corrective move. We're not talking about, an overall trend change. We are talking about a pretty significant corrective move. And we should definitely anticipate that occurring here on the Kiwi yen. Swing structure wise too. I mean, this fold back pattern, this line you see here, just repeating the prior swing structure that we've had. We are due for some type of downside move. How far will it go? I mean, that remains to be seen. I want to bring back the RSI and the composite index though, because these are at some pretty important levels. So the RSI, this is on the weekly chart. If I put a horizontal line here, it's a good idea to just kind of have a frame of reference of how high it is. So the last time we were trading with the RSI at this level, that was back in April of 2013. Now, that itself really doesn't mean anything. The RSI can be, the RSI isn't even overbought yet. It's only at 76. We have to wait for it to get to 80. However, we should note that there are some extremes in these, and also extremes are not that the best either, but Connie Brown was big on that. But we do have some pretty obvious divergence that exists between the RSI and the composite index, where we have this higher high and a lower low. And actually, we could even go back further with that, going back to here. Oops, right there. Higher highs and lower highs. This would be our third one. And yeah, that is something to watch out for. Watch for a cross below this trend line on the weekly chart on the composite index. We drop below that, kiss it goodbye. A likely zone, I don't have my Fibonacci confluence zones drawn on here, but a likely zone, we just do a fib retracement. from this current high to the strong bar, which is here, at least to 73, 74 even, or to 72 and a half. That's what I'd be looking for there. So that's on the Kiwi. I'm not so concerned about the Kiwi yen. The Aussie yen is the one that is like really, I mean, it has gone like full blown cocaine mode, with no signs of stopping. I mean, it is just on a tear, but it's about to end. So this chart here, this is Euclidean geometry, and when we look at where we are currently at, let me get rid of that trend line. We're coming right up against the bottom of this fib channel. That is going to be the stopping point. Actually, anywhere between 83.75 and I'll just say 83.75 and 84.75. Anywhere around there, that is a good level to look at for a short. I mean, that's a great zone for a short. And with these fib, excuse me, with these fib channels, fib confluence zones, I'm sorry, we got a really easy area to look for as far as where we expect to see price get back to. A return to 79.50, very, very likely. Maybe even 79 even. So you're looking at a greater than 500 pip, possibly if it gets higher, 600 pip drop, which is, I mean, depending on the time frames you trade, that's either freakishly a huge amount or it's a pretty natural amount if you trade on weekly and monthly charts. That is a very likely area. That's where I would expect to see it return to. We also have the GPLs, Gann planetary lines. This is this red line here. This is the asteroid. This is going to sound odd, but in financial astronomy, certain longitudinal positions of certain planets, not just planets, but satellites like moons and asteroids, they provide the natural support and resistance levels that exist in financial instruments. And I don't know why that is. I have no idea. I just know that it is the way it is. We are shortly past the mid of these two sextile angles. Sextile is every 30 degrees, or is it every 60 degrees? I think it's every, well, actually, this will let me know. I think it's every 30 degrees. Well, whatever. Sextile trine, that's the angle relationship here. That's the longitudinal position of, it's the longitudinal position of the asteroid Chiron, and then all we do is we pull that data from NASA, JPL, and it gets transposed onto a price chart. Simple. Gann was the one who implemented this style of analysis in his own trading, and it took us a long time to discover they actually used it, and for a long time, technical analysts have well, even to this day, people disregard the effectiveness of astronomical science and the financial analysis of technical markets. But that's what we've got going on here. I want to also take a look at, I don't think I have them on here, do I? No, I don't. Give me one sec. Take a look at the weekly RSI. sure that that's set to the 14 period. I have no idea why Optima defaults it to 10. And because we are in a bull market, I want to look at the 80 and 90 zones. Sorry, I want to do 55 and 45 as my support zones. And the composite index. Yeah, so just like we did with the Kiwi yen, want to take a look at where we're at with the RSI on the Aussie yen. We have to go back pretty much to the same range. We have to go back 8 years until we see us sitting where we're at with this current rise. Ellioticians are probably looking at this and seeing a pretty clear ending diagonal forming in the RSI. And then we have that noticeable divergence at these extremes, which are very likely to be met and found here pretty soon. We could keep going higher, but we'll see. I don't have the square of a range on here. I should put that up real quick. Oops. But lots of resistance zones up here, and this is also the same death cycle that we're in. Same death cycle that we saw on the Kiwi yen. It's just much more apparent here, and plus the Aussie yen is outperforming quite a bit compared to its peers. So probably hear my son doing his baby talk in the background, possibly, maybe. I'm not sure if you can, but if you do, that's what it is. Looking at this kind of a pullback down here, Ichimoku is another good reason why I am so bearish at these levels. And real quick, the distance here, I just want to drag that down to that other layer. Oh, no. That's not what I wanted. Oh, that sucks. Wonder if it'll let me continue. Probably doesn't like. Hold on. It didn't like whatever I did there. We're coming back up. The point I'm making here is that on the Ichimoku system, the current close on the weekly, where we're currently trading at the present, there is a massive gap between where price is at and the Tenkan Sen and the Kijin Sen. I mean, it's a pretty noticeable, massive gap. So, I mean, the gap between, so here's the Kijin Sen, which is the red line. The blue line is the Tenkan Sen. One of the things about the Ichimoku system that is really important to understand is that don't think of the Tenkan Sen as a normal moving average. Think of it more like a, almost like a short-term volatility indicator, represented as a moving average. In a nutshell, you never really want to see price far away from the Tenkan Sen because that's how you know you've moved to an extreme. In the short term, short-term extreme moves away from the Tenkan Sen get corrected very quickly and very violently. And this is the fourth consecutive week where we've traded at such a massive range from the Tenkan Sen. This would be considered anomalous technical behavior. Someone might ask, well, what about the range between where the close is at to the Kijin Sen? And I think it's only, it's 550-ish pips away. I think the max mean is around that 800 to 900 pip range, so it could still move higher. But at the current distance between Tenkan Sen and where the Aussie yen is currently trading, that is a huge gap. And so in the short term, at least basically a 300 pip retracement. 250 to 300 pip retracement at the very least to return back down to the Tenkan Sen. I mean, that is a almost a guarantee. It's almost a free trade. And given the cyclical nature that of how the Aussie yen trades, the end of the month that we have coming up, the anniversary month of the COVID crash. I mean, everything points to a huge flush here in the very near future. So again, anywhere between 84.25 and 85.25, I think is what I said, is a great range to have some sell limit orders ready to go, because there's going to be a pretty big dump in a lot of these yen pairs in the coming weeks. So just be prepared for that. I'm going to try and do videos at least every other day. Busy with other stuff, but yeah. Anyways, thanks for watching.